Joshua, appreciate you hopping on. Really excited to have this conversation. I was really looking forward to it because there's just so much buzz and just all these conversations that are happening around real world assets, tokenization of real world assets, and specifically real estate. And one of the debates is around like tokenization and fractionalization. Are those two things different when it comes to real estate? What are your thoughts on that?
It's a great question. And they are separate things, I think. I come back to historically, real estate assets have been fractionalized. I mean, there's these things called tenancy and commons, right? And cooperative structures. And even REITs are a form of fractionalizing ownership, although that's more into a corporation that owns real estate. I think tokenization is more of a novel concept that we can dive into. So yes, they are very interconnected to each other, but I think that there are sufficient distinctions between the two.
Yeah, I'm hearing even people talk about tokenizing their business. I mean, are we at a point where we're just trying to throw stuff at the wall and see what sticks when it comes to tokenization, or are we seeing a lot of progress here and it's not overhyped at all?
Honestly, I hate to say this. I think it's the prior, not the latter. I think it's one of these instances where we have this potentially revolutionary technology, blockchain, and people are trying to figure out what the use cases are. It kind of reminds me a little bit of like 1993, 1994 with the internet, and this is around the time of like the Netscape browser coming out and people barely using email. And it's just like, with these transformative technologies, layer after layer of applications start getting built. And in 10 years or 15 years, the thing is totally different than how it was even anticipated in the beginning. And I sense that, there's a desire and a hunger for people to entrepreneurs, other ecosystem participants, developers, builders, to demonstrate real, actual applications of a blockchain, given all the rug pulls and fraud that we've seen on the crypto side over the last several years. I think many of us want to demonstrate real world applications. Although, once again, it feels like entrepreneurs are moving faster than policymakers. And so, because of a pretty inept policy regime in the US, I feel like a lot of builders and entrepreneurs are being held back, but we could go into that later.
Yeah, I always feel like it's this cat and mouse chase, right? Because development, to your point, moves so much quicker. And me coming from the security world, I certainly understand that. And so security always tries to keep up with what's happening on the innovation side. And I imagine that from a legal perspective, it's no different. So before we dive deeper, and let's take a step back here and just get a little background about yourself. How did you get into the space? What's your expertise and just a little bit about yourself.
Yeah, thank you. Yeah, I think I got into this space, I mean, just pure luck in some ways. I moved to Northern California in 2008, and I got a job at a clean tech venture capital firm called Alice Capital. And we were looking at storage and energy efficiency and sensors and all kinds of stuff in buildings. And Richard Branson and Al Gore had dinner, and Branson got really freaked out about climate change, wanted to do something entrepreneurial about it, created a company called the Carbon War Room, and asked the managing partner of our fund to come over and be the COO. And he asked me to come over and run the energy efficiency finance business, where we were focused on financing renewable and energy efficiency projects in multifamily office hotels. And we did that for 4.5 years, ended up getting acquired. And I went to a startup called Clean Fund, which is a specialty finance company that provides capital for energy efficiency projects, like very similar to what I was doing at the Carbon War Room. And so I kind of cut my teeth from a 9 to 5 perspective with commercial real estate finance. And then in 2011, as a side hustle, I bought a foreclosure in the Berkeley Hills, and I had to roll up my sleeves and figure out how to remodel the kitchen and the bathroom and lay tile and all that stuff, and really liked it. And ended up buying another one and started doing fix and flips and tear down rebuilds, and got really into the BRRRR method of buy, rehab, rent, refinance, and kind of rinsing and repeating. So my side hustle was doing real estate projects. My day job was financing real estate projects. They kind of meshed together pretty well. And then I should say in 2017, it was March or so, and I had breakfast with a really smart friend of mine and dinner with a different friend of mine. And both of them mentioned Ethereum. And it just a light bulb went off. I was like, huh, two really smart people are talking about the same thing I've never heard of before. I want to know what the F this thing is, right? And just went deep into it. And I was like, well, the way that I'm going to really ultimately understand it is if I invest in it. So it was like, and they were investing in it too. So it was like pure luck, right? That I started investing in Bitcoin and Ethereum then, like, and then that forced me to like have to dive in and learn about it. Started Bonfire to help. I can go into that later, but like I met my co-founder and he had started and sold 3 companies as a technologist, as a CTO. And so he thought our idea would be perfect for blockchain. And he's much more in the weeds, way smarter, way just he's fucking brilliant. And so he was the one to figure out why we're using the tokens we are, the protocols and everything. But it was really a confluence of my background in real estate, getting excited about blockchain, and meeting like my perfect co-founder.
I have to ask because you said you jumped in 2008, and that was the same year we had the entire housing market crisis. How in the world did you survive through that period?
Man, it was scary. It was scary for a number of reasons. I had my money in Washington Mutual, like my savings, right? I had my stocks in Bear Stearns. Like these are like pillars of American capitalism that one day went out of business. It was like overnight, they're like gone. It's like, what is happening here? And it was a scary time, man. It was like this domino effect of the stock market crashing, banks failing, government bailing out all these companies. But the thing what was fascinating about that time was I'm not a huge fan of Warren Buffett. I think he's has cognitive dissonance and he projects this sort of you know persona of caring about the planet, and yet he invests in coal and natural gas plants. Like he just doesn't vibe with me. But I remember in 2008, he's financing Bank of America, Goldman Sachs, all these things that seem like they're going out of business, and he's writing big checks. And I'm like, shit. If there was ever a crisis, I want to make sure I have a level head and I have a clear thesis and I have the dry powder to invest because that's when you make a lot of money is when be fearful when people are greedy and greedy when people are fearful. And it was just a wild time, man. So many different levels. But how did I survive? I don't know. We cut we cut costs and we live very frugally. It's scary.
And it sounds like you've learned one of the biggest lessons, right? As an investor, to your point, when there's blood in the streets, that's when you act. Applying that same mentality to today or potentially in the future, like how can people apply that same method to what's currently happening right now, economically, in crypto, whatever the case may be?
Oh, I think that the parallels are uncanny. I'm no economist, but we're putting out a piece tomorrow. Bonfire is to our couple thousand subscribers that basically there's $17 trillion of U.S. government debt that's going to have to be refinanced in the next 27 months. Okay, it's $12 trillion of existing debt because our geniuses in the Treasury Department basically took short-term debt instead, when interest rates were close to zero instead of longer term. So we have $12 trillion of existing debt and 5 trillion of deficits over the next 2.5 years that is going to be financed. So there's this wall of debt coming. And then on the commercial real estate side, there's $1.5 trillion of commercial debt that's going to be rolling over, where the debt was like 3%, now it's going to be 7 or 8%. Lenders are going to be like, well, you're going to need to come up with more equity. And if it's an office project, there's half the building is full, so there's less revenue, right? So there's going to be a major dislocations throughout our economy. And I come back to Mandarin Chinese word for crisis, which is a combination of danger plus opportunity, right? So I think we're starting to see it. The stock market's now in a correction mode. And I think we're going to see a major cascade from equities in terms of, when I say equities, I mean stocks, but also equity in real estate. I think commercial real estate values are going to go down another 20, 30, 40%. And therein lies the opportunity, right? While everyone else is freaking out, our community in Bonfire is going to be laser focused on these cherry opportunities that are coming across our desk. And we're going to have the capital and the thesis to execute upon it.
So for those that are in commercial real estate and they're freaking out about the future, how can blockchain technology potentially help them with what could be, a crisis here in the near future?
I think the only way that comes to mind immediately, because you got to understand something like I love blockchain. I think it solves so many problems related to title and extraneous fees that really from entities like title insurance companies that really add no value, but they're monopolistic and their legacy and inertia keeps them in their monopolistic positions. The challenge is that we continue to have these sort of legacy institutions that are crowding out and making it difficult for blockchain to penetrate. So so I think we're years away from blockchain being mainstream for real estate. But to answer your question, I think that real estate owners and operators who are facing a significant capital shortage, could utilize tokenization to attract, alternative forms of capital that they might otherwise would not have access to. That's what comes to mind. But I love your perspective. There might be use cases I'm not thinking of right now.
No, I mean, I certainly do agree with you that there is still a certain level of maturity that needs to happen, especially on the regulation side. But, with BlackRock owning so many assets, and we're talking about bonds, we'll probably see the tokenization of that, right? And then they also own so much real estate. So eventually, I think it's just a natural progression that that'll become a little bit more mainstream. But obviously, a lot of it usually starts with the big guys. However, this is something that you're focused on with Bonfire. So I'd love to learn a little bit more about, how are you utilizing Bonfire, and just take me through the platform that you've built and what's the value proposition right now.
Yeah, and would it be helpful to share kind of where we came from and how we've landed where we are? Because we've had to go through a major evolution related to regulation and a shift in our model. And I think it's important for entrepreneurs out there or builders who are thinking about going down the path that we first went down to kind of hear a cautionary tale because it was an intense pivot. So Bonfire was born out of conversations I had with my friends who were in their 30s and 40s who have done everything that society's ever told them to do: go to college, get a job, get married, have 2.1 kids, like all this stuff, right? And they're at the age of life where their parents and their parents and their parents own houses, right? And for most Americans, the biggest source of wealth they'll ever have is the house that they own. People who own real estate have on average 40 times the wealth as renters, right? So except that this generation, our generation, we're saddled with student debt in a way that's never existed before, which is compromising people's choices for their careers, but it's also inhibiting their ability to source a down payment and qualify for a mortgage, which are now 8%. So this entire generation's been left out of the cold relative to previous ones. And so the BlackRocks of the world are buying up, big private equity shops are buying up a lot of the housing supply. So getting on that sort of real estate ownership ladder of abundance is becoming equal, like, very, very tricky for people, very difficult during these times. So we wanted to create Bonfire as a way for everyday people to be able to directly invest in commercial real estate. So we're not trying to solve the affordability crisis in America that just didn't seem like suited for our skill set. But we wanted to make it so that everyday people could buy into compelling commercial real estate projects as easy as it is to buy, you know, crypto or stocks on Robinhood, right? So where we started was our proof of concept MVP, minimum viable product, was we purchased a $310,000 house outside of Charlotte. Okay, my co-founder and I bought it for 290,000, and we put 20,000 into it, and we sold it at cost to our community. Okay, and we both personally invested with our community into the MVP. And our counsel, our regulatory counsel, comes from the crypto enforcement division of the SEC. Okay. And she told us that because of the DAO structure, the decentralized autonomous organization that we had created, which was a DAO LLC out of Wyoming, and it was really intended for everyone to be, an equal member of the ownership and decision making of the asset, that our asset would be more akin to a cooperative or a tenancy in common, but not securities, right? So if the two of us went and bought a apartment building together, it's not a security. It's a cooperative structure, right? And that's been backed by law for 100 years. That was the guidance she gave us, right? Then FTX fell, and she spoke to her former colleagues at the commissioner, and they said they're beefing up left and right. They're hiring lawyers, dozens of them by the month, going after enforcement and going after pretty much every single blockchain project, right? Any project that has any sort of token is in the crosshairs of the SEC. And she's like, the guidance I gave you several months before, I can't stand behind. And Bonfire really needs to treat these assets that you're selling as securities, right? And that was a game changer for us in a really difficult way because securities law in the United States is incredibly arcane, right? There's these laws that about accredited investors. And if folks don't know about this, it's really important that you hear this, okay? Our government, the division of the government, the SEC, Securities and Exchange Commission, has a rule that basically says that unless you make $200,000 a year, or you and your spouse make $300,000 a year, or you have $1 million of liquid net worth outside of your primary residence, you're not allowed to invest in venture capital, private equity, or institutional real estate. Now, you can go out and buy $100,000 worth of lottery tickets, right? You can go to Vegas and sit in front of a slot machine and piss your life savings away. Government doesn't give a shit about that. But God forbid you want to invest in something that, you know, outperforms the stock market over long periods of time, like real estate. Sorry, that's only for the ultra rich, right? The other analogy that comes to mind is like if I went to if we all had to go get a driver's license, we go to the DMV, and instead of taking a test, you had to make a certain amount of money, we would be outraged. And so this is the regulatory world we're having to operate in. One in which only 9.4% of the US population, which is accredited, have access to institutional real estate. And unfortunately, we've had to follow that and limit our most recent offerings to just accredited investors and international investors.
And so you had a DAO LLC, and then the legal counsel mentioned that they no longer advise that. So what kind of legal adjustments did you have to make? You obviously had to file with the SEC, and now you're considered to be a security. Is that the way I understand it?
So how it works is on our subsequent offerings, we had to file what's known as a Reg D offering with the SEC. And not to get too far in the weeds, but basically it's asking the Reg D is an exemption to filing as a security. So Apple stock, they did something called an S1 a long time ago. They filed to go public, right? And they do this registration document. Securities in general have to file a registration document unless you have an exemption to it. And there's a number of them. There's Reg A, there's Reg D, there's Reg CF, there's Reg S. And we had to do a Reg D exemption offering.
Now, what about the strategy of potentially filing outside the United States? I'm not a legal person, and this isn't necessarily a legal segment, but I'm curious to understand, could you have potentially, filed outside the United States and, not be considered a security because of the regulatory, I guess, leniency? It's a lot more lenient in other parts of the world.
Yeah, so a couple things. One is, first of all, we have international buyers who are not subject to these accreditation laws, and that's something called Reg S. And so we can have, we have people from dozens of countries investing in our project. So we're good, outside. But even those other jurisdictions, Panama, Bahamas, Luxembourg, Singapore, if you're marketing to Americans specifically, and also people in the United States, you're still subject to US securities laws. Now, you might go to those jurisdictions thinking that the SEC won't come after you, but then you're playing a game of, evading US law, which is just not something that we're comfortable doing.
Right, understood. Now, transitioning from the legal side and more towards the user experience and what that customer journey is like. Let's say, I have the ability to invest in a property. I'm very curious to see how Bonfire could help me. What's typically that journey for me?
Yeah. So Bonfire looks at this kind of dislocation of, the market right now and high interest rates as I alluded to before, is actually like a once in a generational opportunity. But the key to that is for us to be very, very disciplined and judicious in the projects we're putting on our platform. So for us, like we're like less is more. I'm reading about some of our competitors who are just putting up a deal every day, and I'm just like, God, like these are not good deals. Like I get it that they, are incentivized. They need the volume to make the fees or whatever, but it's like I just don't see how this is going to end well for their investors investing in retail deals. We look at it like we're investing in institutional quality deals that are distressed that through our network we have access to. So to answer your question, how it works is like, we'll have a deal. I'll give you an example of one. There was a hotel that we invested in. It was a $60 million Four Points hotel, and it was outside of San Francisco. And there were three bids on the hotel: 42, 44, 46 million. The seller was selling because they lost what's called their franchise agreement with the flag. So they were going to be without a flag or a name brand entity like a Marriott or Hyatt or whatever. So they needed to sell. And our partner got the bid, even though he was at 42 million and people had bid higher, because he had all the money in his bank account and he could wire it and others didn't, right? So he got a better purchase price than the others. Through discovery and due diligence, he found an asbestos issue that the seller didn't tell but knew about. And he went, ballistic and got another $6 million knocked off the purchase price, even though the asbestos is going to cost nothing near 6 million to fix, right? So a good deal became a great deal, right? And we got Marriott to be the flag, and it's already 27% ahead of pro formas in terms of the first 4 months of this project. And we haven't even implemented the repositioning yet. So we want to find deals where there are A plus operators, people who are like savants in a niche or a marketplace, or like a market. They understand Southern California multifamily better, or low income, multifamily, or like just people who are brilliant, who have the track records that we can co-invest with them. So what will happen is we'll find a project, we will do due diligence on the sponsor, which means the real estate operator, as well as the property. We tend to walk the properties. We do background checks on the sponsors. We stress test all the assumptions and make sure, because anyone can lie on a on a spreadsheet, right? Want to make sure that what the sponsors are saying about rents and what they're saying about interest rates, like all that stuff, we trust, but we validate or verify, right? Once we're comfortable with it, we put out an email to our network and we say, hey, this is the project. First come, first serve. We're going to do, so it begins with an email. We have a webinar, usually with our sponsor and us, kind of walking through how the project works. We get on the phone with people to answer questions. And, they tend to sell out relatively quickly. And what people are investing in are tokens, which represent a membership interest in a limited liability corporation, specifically a Wyoming LLC. And that LLC sits on the cap table of the asset. It literally owns an interest in the asset. So it's a token represents ownership of the asset, is kind of how to think of it.
I mean, technically, you can do this without utilizing the blockchain, right? And just accept cryptocurrency. Uh, I have a few folks in my network that are in commercial real estate, and they're not necessarily utilizing blockchain technology, right? But you can still gather folks together and invest in a specific property, not necessarily REITs. I'm curious to understand for you, why exactly did you decide to apply blockchain technology when technically in some ways you can create this without utilizing that?
It's a great question. I think the real benefit of tokenization, specifically blockchain, is around the secondary marketplace, which we're building, where if people want to have liquidity into their tokens. Like historically, if you invest in a syndicate into as a limited partner real estate deal, you have no liquidity until the sponsor sells. And that's where blockchain comes in and will facilitate people being able to buy in and get out of these projects. So what Bonfire is building is like the rare bulls of real estate. We're not OpenSea, right? We're not trying to allow every project on our platform. We're like highly curated, super high quality projects that we have tokenized interest in, and eventually we're going to have a lot of them, and that's going to exist on our secondary marketplace. That's where we see the benefit of blockchain.
But, and again, I'm not a legal expert, but
Yeah.
do some of these SEC regulations, do they limit the appeal of using blockchain technology in terms of the liquidity?
So yes, and the reason why it's a sort of a nuanced question, but the SEC has done a really poor job of explaining what specifically custodianship means with digital assets. And so, sure, we can like there's rules that say like you know you have to you cannot resell these securities for 1 year. Which, by the way, I'm seeing platforms left and right, like blatantly, or maybe they just don't know. I mean, they are violating the SEC's laws. And if you're an investor in those deals, I mean, you're potentially subject to rescission laws. Like you could lose everything if you invest in a platform that isn't following these laws. But anyways, that's a separate issue. You need something called an ATS license, an alternative trading system license, and we really need the SEC to clarify how platforms like Bonfire can hold, digital tokens in good custody. And until they really resolve that, it's going to be hard to have a truly flourishing, functioning secondary marketplace.
What do you think it'll take for us to get a little bit more clarity on that?
I think Gensler has to be replaced.
I don't know. I think a lot of people have tried. He's been on the hot seat a few times and seems like he's staying put. Is there a like a limit to how long he can serve?
I don't know. I hope so. It's pretty sad, right? He's a Goldman guy. Seems to be pretty, pro Wall Street and old school kind of Wall Street guy. And seems like Wall Street's pretty threatened by the rise of digital assets and specifically Bitcoin. And seems like they're going to try to do everything that they can to stop. Although now, if you can't beat them, join it. I mean, BlackRock's about to get this ETF passed, and um, yeah, it's interesting. Like Jamie Dimon is kind of pissed on Bitcoin for so many years, and but it seems like J.P. Morgan also has a side business that's handling. I don't know if they've applied for an ETF license or not, but um, I don't know. I don't know what Gensler's agenda, man, is. It's really weird how he's just fought tooth and nail for the release of this ETF, and Grayscale won in court, and then Ripple took him to court, and they lost again, right? Like I just don't get it. But I'm not really on the advocacy policy lobbying side of things, so I would really defer that. It's a great question to others who are just way more informed about, how we change and get more clarity around this custodianship issue.
One question that I saw pop up on LinkedIn was, should real world assets include like treasury bonds? Like, should that be considered as a real world asset, or should we just look at real estate and premium goods and categorize that as real world assets? What are your thoughts on that?
It's a great question. What comes to mind for me is I have a belief that every single asset on Earth will be tokenized. And I know that that sounds, I don't know, might be controversial, but like you think about all this. One use case for tokenization that I think is going to be very powerful. If you take a step back and you think about what the blockchain is, it's really a ledger, right? It's a way for people to have trust around the integrity of data, right? So assuming that we bought into that as a definition of blockchain, not the only one. Well, so many of us have stranded equity left and right. And so I'll give you an example. Like you work at a startup and the startup does well over time. yes, there's some secondary marketplaces evolving, but they're really expensive and it's a very inefficient market. But if I could tokenize, my shares or borrow against them like through tokenization, that would be really powerful, right? Or let's say I'll give you an example of something. Let's say I lived in a house and I needed, let's say it was worth $1 million and I needed $50,000 for whatever reason to pay for my daughter's schooling or something. It'd be pretty cool to be able to put the deed on blockchain and tokenize it or fractionalize it in such a way where I could sell off, you know, 5% of my house to a disparate network of folks, right? So, what is a real world asset? What is an asset, right? What is real estate? I mean, sure, we think of real estate as these buildings and hospitals or hotels, but real estate is really a piece of paper. I mean, it's a trust, it's an agreement around a codification of rights and responsibilities, right? And that's what a treasury bill is too, effectively. It's, I've paid this in and I'm going to get this return back. So thinking that, basically all assets are agreements from one person to another, stipulating what one's rights and responsibilities are, then I take a more expansive perspective as to what a real world asset is.
How does this perspective play into what you're doing at Bonfire?
So I've been accused by my board and teammates that my eyes can be bigger than my stomach at times. And as a founder, one of my superhero powers is not saying no, right? Like I want to do everything. I want us to be global. I want us to be tokenizing a renewable energy project. I just had a friend who died who was a big champion in the climate change space. And I want us to put a solar asset on our platform or a wind one in the next 6 months, right? It's turning out to be harder than I thought. So I think we have to take an expansive perspective because the world is global, obviously, it's a redundant statement, but we also have to execute very hyper locally. And what I mean by that is really deliver significant value to our customers and really delight them and add value to their lives. And if we're not doing that, like that needs to be our mission. And then from there, we can kind of explore different use cases, but just really staying close to our customers and staying in the US, in US commercial real estate is where we need to be right now.
Yeah, I understand you trying to focus on one thing at a time, but at the same breath, your mentality of dreaming big. I think that ultimately is a huge characteristic of being an entrepreneur and taking risks and thinking about what's the next step and always trying to stay ahead. So thanks so much for sharing all that, Joshua. Where can people learn more about Bonfire?
If they go to bonfire.capital, they can get in touch with us. They can read more about us. I'm very available, by the way, if you want to email me, joshua@bonfire.capital. I'm active on LinkedIn and Twitter as well. So yeah, thank you. I've really enjoyed this conversation. It's a pleasure to be here, and I really appreciate you and this conversation. So thank you.
Thank you. And any parting thoughts for the listeners?
Just continue to educate yourself, right? Education is power. And if something seems too good to be true and there's a voice of caution, go with that intuition. And if founders of projects are unwilling to talk to you, it's a red flag, right? If they're not doxed, red flag. So just continue to do your education, give us some feedback how we can be better, and keep at it. Thank you.
Said Joshua. Thanks again for your time and best of luck to you with Bonfire.
Thank you, Mikhail. Appreciate you.